Welcome back to my monthly dividend update on the Dividend Guy channel. The last month has been middling in terms of overall performance, and my portfolio has grown to $119,000, mainly due to me putting another $1,000 into the fund. The biggest change we had over the last 30 days is me opening a position in Lockheed Martin with 2 shares being purchased. Now, let's get into how our portfolio performed since the last update. For the month of December, it actually was one of the biggest dividend months of the year for me. My portfolio paid out $740, with the largest payouts being from SCHD that paid me $434 on the 13th and $61 coming from XLRE on the 25th. Other than that, I also got smaller payments from Kroger, government bond funds, GPI, GPQ, Visa, corporate bond funds, Chevron, Exxon, Microsoft, O, NVIDIA, T. Rowe Price, QYLD, DGRO, VDE, VIG, and VPU. As for what I did with these funds, I very simply had them reinvested back into their stock. I know some people say you should use dividend funds to open new positions or bulk up on certain holdings. I understand where they are coming from, but every holding I have, I believe will perform over the long term. And until my portfolio is much larger, I don't see the point in focusing only on certain positions, especially my position in SCHD, which I love seeing grow by several $100s every time a dividend payment hits my account. I also want to point out this dividend portfolio is not the entirety of my investments, and I have a larger growth account to back up the potential reduced gains with dividend-focused investments. As for what is on the radar for this upcoming rest of January, I am set to receive about $200 in dividends, which is one of my lower months, but is still a solid amount of income. The biggest payments in January will be ADP, Altria Group, Pepsi, and American Tower Corp. My goal for next year is to beef up some of these weaker months with strong companies on a similar payout schedule. I know that in reality there is no problem having months much larger than others. However, my goal for this portfolio is to provide stable income in retirement. And in order to do that, I would like my weaker months to pack a bit more oomph. As for what companies I am looking into to open up a new position in over the rest of the month, I have my eye on 2 companies I am very interested in. The first is Raytheon, which currently sits at a share price of about $120. This company focuses on making missiles and defense products for the U.S. government. They have a yearly revenue of about $20 billion with a profit margin of 7%. While they don't have the highest currently dividend yield of about 2.16%, I think the company is set on a good trajectory, considering most countries are beginning to ramp up their military capability. I also want to invest in Ecolab because of its strong track record as a reliable dividend-paying company, which aligns perfectly with my long-term investment strategy. Ecolab has consistently grown its dividend over the years, demonstrating a commitment to returning value to shareholders. Their steady payout history gives me confidence that my investment will generate a dependable income stream, while also benefiting from the company's growth in essential sectors like water treatment, hygiene, and sustainability. As a leader in industries that are becoming increasingly critical in today's world, Ecolab offers both stability and the potential for long-term appreciation, making it an ideal addition to my dividend-focused portfolio. I've decided to stop adding to my covered call ETFs for now. While they've been fantastic for generating steady income, I feel it's time to let the dividends reinvest themselves and let the drip compound over time. These ETFs have been a reliable part of my portfolio, but as I look ahead, I want to shift my focus toward companies that offer more potential for capital appreciation. Covered call ETFs are great for income, but they tend to trade off some growth potential for those consistent payouts. And at this point, I want to balance my portfolio with investments that can grow over the long term. By redirecting new contributions to stocks with higher appreciation potential, I'm aiming to capture more upside while letting the income from my covered call ETFs continue to build quietly in the background. It feels like the right time to diversify my strategy and focus on long-term growth opportunities. The last 2 months haven't been the best in terms of performance for my portfolio, but I take comfort in knowing I'm not alone. The overall market has been struggling during this period. While it's never fun to see red on the screen, I remind myself that these short-term fluctuations are just part of the natural market cycle. Looking ahead, I feel optimistic about the upcoming year. There are signs that economic conditions are stabilizing, and I believe we could see a more favorable environment for growth and recovery across sectors. This kind of market pullback often sets the stage for stronger rebounds as valuations start to look more attractive and investor sentiment improves. While no one can predict the future, I'm staying focused on my long-term strategy, confident that the foundation I've built in my portfolio will benefit from the opportunities the next year could bring. Patience and perspective are key, and I'm excited to see what's ahead for the market. My ultimate goal for the end of this year is to have my portfolio reach a total value of $130,000 while yielding approximately $5,500 annually in dividends. Achieving this milestone would reflect not just steady growth in the market, but also the disciplined contributions and reinvestments I've made along the way. A dividend yield of around $5,500 a year would provide a solid foundation for generating passive income, and it's a testament to the power of compounding and a thoughtful investment strategy. By carefully balancing income-focused investments with assets that have strong growth potential, I'm confident I can reach this target. It's not just about hitting a number. It's about building a portfolio that aligns with my long-term financial goals and sets the stage for even greater success in the years to come. I'll see you all next month, and hopefully I'll have some exciting growth to report on by then. Markets may ebb and flow, but each month is another opportunity to build, learn, and make progress toward my goals. Whether it's watching dividends reinvest, seeing long-term picks appreciate, or adjusting strategies as needed, every step is part of the journey. Here's to hoping the next update brings more green, more growth, and another milestone closer to where I want to be. Until then, I'll keep focusing on the long-term picture and staying disciplined in the process.